Hello and welcome back to Lunch at the Market. What a wild ride. I'm sure you all have motion sickness after the past 5 trading days. And just to let you know, we had started selling out of our puts today. We sold puts that we owned in Bank of America, Boeing, Blackstone, and GE. Interesting that most of those puts we owned were on stocks of companies that begin with the letter B. Well, on to the real news. We actually exercised our puts in Vail and Barclays. We were in the money by $3 a share on Barclays, a name we still like very much and will actually look to buy those shares down here around the $17 level. At $17, Barclays now trades with a forward PE of 5.21, which we think is just bananas. We've done no buying of stock today, but we are getting along September and October options in names like Visa, symbol V, Thoratech, symbol THOR, and Cisco, symbol CSCO. Looking back at our article on the blog from December 11th, I see that our UUP trade, that's PowerShares Dollar Bull ETF, we're up 10% on that trade. As the rest of the world becomes more and more uncertain, owning the dollar has worked more and more. Not bad for a terribly boring trade that has just continued to grind higher and higher over the last 6 months. You can go back and read the article on using UUP and the VIX ETN, symbol VXX. The VXX is up 40% this week, so if you had that as a hedge, you'd be making a pretty penny in this insane market. I'm sure we don't have to point out that sell in May and go away has rarely been this right. We pointed out endlessly that raising cash was a good idea, and on Wednesday, before we left for Pennsylvania, we sold a half a dozen names so that we're not caught with our pants down if something happened while we were at the funeral. How is down 900 points for something happening? The markets are now ruled by fear. Again, we want to suggest getting short stock. Apparently, technology is a great place to do that. Just make sure that you have calls at the strike you sold your stock short to protect yourself from getting blown up. At some point, this madness will end, as the earnings for companies in the first quarter has been very good, and the jobs number today didn't include a huge census hiring, and it was a very good report with job creation of 290,000. For long ideas, consider picking up Lumber Liquidators, symbol LL, and Badger Meter, symbol BMI. BMI went all the way down to $44, and you can now grab it. Sorry, it went all the way up to $44. You can now grab it for $38.70, and it trades with a reasonable valuation at around $18. They make pressure and flow control products for water utilities, municipalities, and industrial customers all over the world. Lumber Liquidators is a company you see often bringing in the wood flooring on Extreme Maker Home Edition. Has $50 million in cash and no debt. The company traded all the way to $32 and is now pulled back to $28.33. The PE here is about the same. Both companies have a PEG of less than 2, and both companies went up endlessly until this massive pullback. LL is already trading in the green today and would be our number one pick to put capital. You want to define your risk, consider owning the August 30 strike calls for $2.30, down 40 cents today. Good luck out there, and please don't do anything irrational. It's more important than ever to be hedged. Know what you own and do your homework, and please always have cash in your portfolio for times like this. Then you can be an opportunistic buyer and not someone who prays for the market to go back up so you can sell when you didn't have the guts to last time. Have a super day, and we'll see you next week.